If you've ever blown up an account, chased a trade out of frustration, or felt your heart race after a loss, this episode is for you. Hey everyone, welcome back to our podcast where we share real world experiences in the crypto market. If this is your first time following the channel, we're offering cashback transaction fees for all traders with just a few simple steps. Details in the comments. Today, we're diving deep into one of the most critical yet overlooked aspects of trading psychology. If you've ever blown up an account, chased a trade out of frustration, or felt your heart race after a loss, this episode is for you. Let's take apart why traders lose, the psychological traps we fall into, and what you can do to reprogram your brain for success. Get a coffee and let's get started. This is going to be life-changing. First, let's talk about why trading, especially cryptocurrency, is so hard. Humans are wired for survival. Our brains associate trading success with financial freedom, security, and even status. And when we lose a trade, it's not just a financial loss, it's a loss of life. It causes us to respond with panic, fear, or even fury. Have you ever heard of revenge trading? It's when you lose a trade and immediately get into another one to fix it. It's like a hunter missed the shot and shoots randomly again, hoping to hit something. Spoiler alert, it rarely works. And then there's loss aversion. Studies have shown we feel losses twice as much as gains. So, having incurred a string of losses, we are determined not to repeat them, which means we form awful habits, taking profits too early, letting losses run, or trading without conviction. And here's a staggering statistic. Trading is indeed a 50-50 game. Prices move up or down, but over 90% of traders end up in the red. Why? Since emotions overrule sense, our problem-solving mechanism in the brain kicks in, viewing a loss as an issue that can be resolved by purchasing or selling again promptly. In crypto with volatility 24/7, this is a recipe for catastrophe. Let's get into the source problems. For starters, we link trading with survival, and thus we feel losses personally, not just financially. A $500 loss isn't just numbers, it's a personal failure. Second, revenge trading is a killer. After a loss, your brain screams, do something. But impulsive trades rarely recover your capital, they just dig a deeper hole. Finally, emotional trading comes from our natural instincts clashing with the disciplined mindset trading demands. Crypto's wild swings, think Bitcoin dropping 10% in an hour, amplify these emotions, making it harder to stay calm. So how do we escape these traps? Here are 7 easy steps to rewire your brain and trade like a pro. First, sign a daily contract. Every morning, write your trading rules down. No market orders, stick with pre-planned entries, stops, and take profits. Sign your name and place it on your desk so you can view it. This small ceremony enforces discipline and keeps you honest. You would not break a legal agreement, so do not break this one. Second, limit your trades. Overtrading is a death spiral. Only take high-quality setups. At the close of the day's trading, recall every trade that you've taken. If you're unable to logically explain each one, you're probably trading too much. Quality over quantity is the name of the game. Third, define trade parameters. Each trade needs to have a clear plan, an entry, stop loss, and take profit. Never move your stop loss unless it's being done as part of an established method, like moving it to break even on a one-to-one risk-reward. A plan removes emotions from it and has you trade robotically. Fourth, link clicking with losing. Here's a psychological tip. Train yourself to see instant trades after a loss as possible losses. When you feel the urge to click buy or sell from frustration, halt. That click is your enemy. Recondition yourself such that impulsive clicking will make you blow up your account. Fifth, create post-loss habits. When you've lost, take a break from your desk. Go for a walk, go to the gym, or jam out to music. Anything positive to stop the emotional downspin. This clears your mind and keeps you from getting revenge traded. Sixth, write daily summaries. At the end of each trading session, record your emotions, trades, and what you've learned. Did you follow your plan? What caused an emotional trade? This exercise builds self-knowledge and enables you to recognize patterns to fix. Finally, stick to a risk management plan. Set firm limits. Cap the day's losses at, say, $250. If you've hit that, you're finished for the day. Maintain a 2-to-1 risk-reward ratio. Risk $250 to profit $500. And here's advice from a pro. Close out after some number of wins or following a single loss to secure gain and safeguard your capital. Not every trading issue is psychological. If you are a beginner, you might lack a proven strategy. Employ one with more than 50% win rate. Backtest it in the past and trade it automatically. Emotions cannot be eliminated, but you can rewire your brain with cognitive behavior techniques like associating impulsive clicks with losses. The goal is not to be perfect, but consistent. Minor disciplined gains compound over time and turn you into a profitable trader. Closing cryptocurrency trading is equal parts mental struggle and technical. By understanding how and why we fail, our instincts for survival, aversion to loss, and emotional triggers, and cultivating disciplined routines, we can overcome the 90% failure rate. Sign that daily contract, limit your trades, and follow through on your risk plan. Your future self will thank you. If you like this, subscribe, like, and let me know in the comments what psychological traps you're fighting with. Until next time, trade smart, stay disciplined, and keep stacking sats.